Hi, this is Indraneel and you are watching Business Bites in our channel The Spotlight, India's first online business news channel. In today's Business Bites, first news we have EdTech Unacademy's founders are stepping down from their role after failed acquisition of Allen. Second news we have L&T is aiming to create multi-billion-dollar defense business to upgrade and modernize the military. Third news we have legacy e-scooter companies are grabbing market share and keeping Ola and Ather in third and fourth position. Fourth news we have Mukesh Ambani led Jio Financial Services to launch mutual fund with BlackRock as Jio BlackRock Asset Management joint venture. And fifth news we have Oracle states the parent company of Oyo is planning for their third attempt to launch their initial public offering. In first news, EdTech Unacademy's founders are stepping down from their role after failed acquisition of Allen. Bangalore-based EdTech company Unacademy co-founder Gaurav Munjal is stepping down from his role as CEO after failed acquisition deal and growing focus on its language learning app AirLearn when he is handing over the role of CEO to Sumit Jain, while the fellow co-founder Roman Saini is also moving out of an active role at Unacademy. Gaurav Munjal, Roman Saini along with Hemesh Singh, who left Unacademy in June 2024, had co-founded the company in 2015 as a YouTube channel. And the departure of all three founders and especially Munjal stepping down over Unacademy's future amid struggles in its online business. And also as Unacademy continues to pivot away from its once dominated online test preparation model to a more capital-intensive offline strategy centered on physical coaching centers, which is a move that has proven challenging in the post-pandemic edtech downturn. For financial year 2024, Unacademy reported an operating revenue of 840 crore, which is down by 7% from the previous year, while their net loss narrowed to 631 crore, which is a 62% reduction from financial year 2023, and over the past 3 years, Unacademy's cash burn had reduced from over 1000 crore annually to under 200 crore. The new CEO, Sumit Jain, who is also on the board, joined Unacademy in 2020 when he sold his startup OpenTalk to the Unacademy. Mr. Sumit Jain had founded real estate listing portal Common Floor and sold it to Quicker, which was an online classified operator, in 2016. Last year, Unacademy was in talks with Kota-based Allen Career Institute for a potential acquisition, valuing the company at around $800 million, which was a steep cut over 75% from their peak valuation of $3.4 billion, and the deal talks failed over differences in valuation. Till time, Unacademy has raised a total $880 million in funding when they last raised $440 million in August 2021. In second news, L&T is aiming to create multi-billion-dollar defense business to upgrade and modernize the military. Larsen & Toubro is aiming to create a multi-billion-dollar defense business where there is a sharp rise from 6,185 crore, which is about $726 million of orders in the previous fiscal year, with a focus by the government's push to upgrade and modernize the military. As the engineering conglomerate L&T has a broad presence in the defense sector, especially in manufacturing warships, patrol vessels, armored vehicles, artillery guns, and missile systems. L&T was also associated with the design, engineering, and construction of the INS Arihant, which is India's first indigenously designed and built nuclear-powered ballistic missile submarine. Last October, it launched the first of 2 multi-purpose vessels for the Indian Navy from its Kattupalli shipyard in Chennai, when they are also constructing 3 cadet training ships and 6 other vessels for the Navy. L&T has a state-of-the-art shipyard capable of building large warships, conventional submarines, and critical equipments and systems, when their business, however, does not manufacture any explosive or ammunition. The company's defense portfolio, which falls under the precision engineering and system business, secured 13,326 crore worth of orders last fiscal, which is a 29% growth, and earned revenue of 6,185 crore last fiscal with 32% growth. The conglomerate's bait gains significance as the global defense supply chains facing severe strain due to geopolitical conflicts such as Russia-Ukraine war, which is disrupting critical supply routes especially in the Eastern Europe, which is affecting the availability of essential materials and components. The company is also open to partnering startups in areas of power distribution, and load management system when L&T is also targeting a 20% market share in the nuclear power segment. In third news, legacy e-scooter companies are grabbing market share and keeping Ola and Ather in third and fourth position. TVS Motor and Bajaj Auto gained market share this month, which is accounting for 25% and 22.6% respectively, despite marginal dips in volume. When Ola Electric fell to the third position in India's electric two-wheeler market in May. The Bhavish Agarwal-led company had a 20% market share in the first 26 days of May, which is down from a 22.1% share in April as per data from the government-run Vahan portal, where they recorded 15,221 vehicle registrations during May 1st to 26, which is a steep decline of about 60% from 37,388 in the entire May 2024. The slide in market share comes as the company has come under the scanner for the issues including discrepancies in reported sales data, concerns over vehicle quality and missing trade certificates at several retail outlets. In February, Vahan data showed 8,652 registrations for Ola Electric, whereas the company claimed in its filing that it had sold 25,000 units. Meanwhile, the company's cell manufacturing project is under uncertainty as Ola Cell Technologies Private Limited, which is a wholly owned subsidiary of Ola Electric, began construction of its gigafactory in May 2023 in 4 phases to manufacture lithium-ion cells for electric vehicles. In its IPO prospectus, the company had earmarked 1,227 crore for expanding cell production capacity from 5 gigawatt per hour to 6.4 gigawatt per hour under the second phase of the plan. However, in a May 15 report, monitoring agencies ICRA said none of the fund had been utilized till then. In the e-scooter players list, newly listed Ather Energy also posted a drop in market share, which is down to 13.1% in May from 14.9% in the previous month, with their vehicle registration declining to 9,962 units from 13,287 units during the period. In fourth news, Mukesh Ambani led Jio Financial Services to launch mutual fund with BlackRock as Jio BlackRock Asset Management joint venture. Jio BlackRock Asset Management, a joint venture between Mukesh Ambani's Jio Financial Services and US-based BlackRock, has received SEBI's approval to start their mutual fund business in India. In July 2023, Jio and BlackRock had announced an agreement to create Jio BlackRock, which is a 50-50 joint venture, and that marks the US-based asset manager's re-entry into the Indian market after it exited in 2018. BlackRock presently manages assets worth $11.58 trillion globally as of March 31st, and they had exited India in 2018 by selling their stake to DSP BlackRock Mutual Fund. And now, as Jio BlackRock Asset Management, they are aiming to launch a range of investment products which include BlackRock's capabilities in data-driven investing. When for retail investors, the offering will also be distinctive for its digital-first customer proposition, and differentiators for all investors of the Jio BlackRock Asset Management offering will include competitive and transparent pricing and innovative products supported by the application of BlackRock's preeminent risk management expertise, which include their flagship technology platform, Aladdin. And in fifth news, Oracle Stays, the parent company of OYO, is planning for their third attempt to launch initial public offering, that is IPO. In that context, OYO's management has been holding informal discussions with bankers over the past month and is now moving to formally when some of banks have floated a potential valuation as high as $10 billion when OYO's internal expectations are more logical with their valuation at a range of $6 to $7 billion. The company is likely to file their draft red herring prospectus between August and September this year, as they are targeting a public listing in the March to April in 2026. OYO first filed a draft red herring prospectus with the Securities and Exchange Board of India, that is SEBI, in 2021, aiming to raise 8,430 crore through the public listing, but withdrew the proposal in 2022. And a second attempt via SEBI's confidential filing route in 2023 was also pulled back in 2024. And now the key factor for the IPO push could be the $2.2 billion loan taken by founder Ritesh Agarwal in 2019 to increase his stake in the company. The board and shareholders, including SoftBank, which holds 40% stake in the company, are aligned on taking the company public soon, particularly after the sharp turnaround in business. The company has rationalized their global operations while consolidating its presence in key markets like India, the US, Europe, and Southeast Asia. OYO is yet to file their financials for financial year 2025, but is expected to include them along with the first quarter result for financial year 2026 in its upcoming draft red herring prospectus, wherein OYO is estimated to have posted a net profit of 620 crore in financial year 2025. So these were the top 5 business newses from Business Bytes in our channel The Spotlight, India's first online business news channel. I would like to request you to please subscribe this channel so that you can have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.